And business tonight, fresh stress in the global energy markets, thermal coal prices in Asia and Europe charging to record highs as a threat of supply disruptions adds new risks. Now, benchmark Newcastle coal futures in Australia jumped 5% to nearly $464 a tonne today. Europe's benchmark coal price is also at a record. Europe has been struggling with its energy needs since Russia invaded Ukraine. It's reached crisis mode a day after Russia stopped gas flows. To plug the supply gap, Europe is turning to coal, in turn pushing up prices. There's also the potential of weather disruptions in Australia. That is a key global supplier. A third straight La Nina forecast for later this year could deliver heavy rainfall, and some previous La Nina periods cut coal output by as much as 30%. Well, Stefan Konstantinov, a senior energy economist at ICIS, joins us now. Stefan, record coal prices in Asia and Europe as the EU energy crisis rages on. How much higher could prices go?
Prices could go even higher. This is a perfect storm which is happening at the moment, with both supply and demand factors that are causing record high coal prices. On the supply side, we've got reduced Russian coal supply to Europe due to European import bans. And also, as you mentioned, the threat and market fears of reduced Australian supply due to weather disruptions and expected heavy rainfall. On the demand side, we have equally strong, if not stronger, drivers. There is very significant coal demand increase in Europe, in the European power sector, as the continent is trying to ensure security of electricity supply, given the shortage of gas. So some countries have reopened previously closed plants and are running its existing coal units at maximum capacity. Also, we have key consumers in Asia, such as India and other Asian nations, also boosting imports of coal in response to high gas prices. And many nations are substituting gas with coal, given the current high gas prices. And also during and post-COVID, there has been a relatively slow renewable investment in some global regions, which has meant that when electricity demand surged back after COVID, we're back to needing coal to produce electricity. Hence, we could expect further increases in coal prices.
Yeah, increases is one thing, but, is there enough energy supply, be it coal or gas, to power that demand and fill that gap that's been left by Russia?
Yeah, your question points to the market situation in Europe, which is most directly impacted by the gas shortage and also coal shortage caused by the withdrawal of Russian energy resources. Gas prices in Europe, where Russia previously supplied about 40% of all gas, are around 10 times higher than they were a year ago. And the extremely high gas prices in Europe put it in competition with Asia for scarce and limited LNG supplies. But they also mean that the market is clearly running out of physical supply options for power generation and is searching for price levels at which gas demand will start to recede and be cut back. We have already seen industrial gas demand responding with levels in countries like Germany significantly lower than the average of the past 5 years. But to answer your question, it remains to be seen whether these current levels of market-driven gas demand reduction and destruction will be enough. And in the worst-case scenario of no Russian gas supplies to Europe and a very cold winter, market gas demand reduction may not be enough, and gas rationing might be needed.
Yeah, and so, economies, they're suffering from this energy battle, except maybe for Russia. So do you think the situation will worsen after the EC unveils its emergency proposal to tackle spiraling energy prices next week?
It is a question which a number of people are asking indeed. So European politicians and politicians actually across the globe are trying to respond by implementing different measures like price caps and mechanisms to actually shield end users from the high energy and gas prices. The ironic thing, however, is that by shielding end consumers and by capping energy and gas prices, we're not, in economic terms, allowing the full extent of gas demand reduction and gas destruction to take place. So yes, a short-term relief probably for energy consumers from the increasingly high gas bills and energy bills. However, the actual physical supply and demand situation on the market cannot be easily fixed by just a simple gas price cap.
Many thanks for speaking with us, Stefan Konstantinov there from ICIS.